Cryptocurrency has been a hot topic for over a decade, yet it's still surrounded by mystery and curiosity. Today, we're diving into the basics of cryptocurrency, why it's gaining traction, and if it could be the future of finance. 1. What is cryptocurrency? At its core, cryptocurrency is digital money that operates on a technology called blockchain. Unlike traditional money issued by governments, cryptocurrencies are decentralized, meaning no single entity controls them. Bitcoin, the first cryptocurrency created in 2009, paved the way, but now there are thousands, including Ethereum, Litecoin, and many more. 2. How does it work? Cryptocurrencies are built on blockchain technology, a secure, public digital ledger that records all transactions across a network. This system is secure, transparent, and, most importantly, decentralized. When you make a transaction, it's verified by a network of computers, making it almost impossible to manipulate or hack. This verification process, known as mining, is a core aspect of how most cryptocurrencies operate. 3. Why are people interested in cryptocurrency? Cryptocurrencies promise financial freedom and security without the involvement of banks or governments. For many, it's appealing because they can transfer money across borders quickly, with lower fees and without worrying about currency conversions. And with the possibility of high returns, many see crypto as an investment opportunity, betting on its potential to disrupt traditional finance. 4. The pros of cryptocurrency. One of the biggest advantages is accessibility. All you need is an internet connection to start trading or transferring funds. Cryptocurrency transactions are also faster and often cheaper than traditional banking, especially for international payments. Then, there's the potential for significant financial gain, as some early adopters have seen exponential returns on their investments. 5. The risks of cryptocurrency. With great potential come significant risks. Cryptocurrency markets are highly volatile, with prices capable of massive fluctuations in a single day. Additionally, since they're still unregulated in many countries, there's less protection against fraud or loss. And because transactions are irreversible, if you send crypto to the wrong address, it's gone for good. 6. Is it really the future of finance? Many believe cryptocurrency has the potential to become a key component of the financial system, while others think it will remain a niche. Some governments are even exploring central bank digital currencies, CBDCs, to leverage blockchain technology while retaining control. Blockchain technology itself is being used in various industries to improve transparency, security, and efficiency. Cryptocurrency is a groundbreaking innovation with the potential to change how we think about money. But with its benefits come risks, and it's crucial to do thorough research before jumping in. While it may or may not fully replace traditional finance, it's clear that cryptocurrencies and blockchain are reshaping the financial landscape.